So, let's take a look at what the cruise line industry has done over the long run, shall we? Oh my gosh! Hey, what's going on, guys, and welcome back to the Money Badger channel. And today, for the stock pick of the week, we're going to be talking about not just one stock, but the cruise line industry, specifically Carnival Cruise Line, Royal Caribbean, and Norwegian. And the reason why I want to talk about the cruise line industry is because despite the fact that in April there were a lot of videos talking about the cruise line stocks, where they were at versus whether they were a good buy or not, I think after a month later, I think it's important for us to be able to understand kind of where they're at today. And with the economy reopening here in the United States, I think it's important for us to know whether now is a good time to buy or to continue to wait and see. So let's get into it. Now, as always, guys, I like to disclose three key things when I do the stock picks. One, these are my opinions. Two, you should always diversify in your portfolio. And three, continue to be diligent on what your portfolio is invested in to always know what's going on with it. And as always, guys, if you like the content I'm putting out on this channel, be sure to subscribe if you haven't already and hit the like button on this video. For those who have ever asked me what the best way to take a vacation is, I have always said cruises. You don't have to worry about what you want to do. You don't have to worry about what you want to eat. It's all available to you on the ship. And as a laid-back guy myself, I personally love it. And a lot of people here in the United States and around the world love it too. And the big reason for that is because of how big of a bang of a buck you get when you are on the ship. Because cruise lines take advantage of fixed costs plus very cheap labor cost, given the fact that they have a lot of their staff come from other countries, including the legal use of international law, they are able to make an incredible margin while also allowing the tickets to be incredibly cheap. However, because as we know from the pandemic, the cruise line industry has not only slowed down, it has just been sitting in harbor altogether. In fact, several of the Princess cruise lines, which is owned by Carnival Cruise Line, like the Diamond Princess, actually ended up literally staying in harbor for so long with their guests on board because of the COVID-19 pandemic when it was in Japan. It's for this reason that the cruise line industry has not been able to generate any income while still having their fixed costs that they have to pay for, leaving the cruise line industry in basically a very, very large sinking ship. Yeah, you better believe there's going to be some dad puns in this one. But in all seriousness, when you think about the sinking of the cruise line industry, you just have to look at their stocks. So, let's take a look at what the cruise line industry has done over the long run, shall we? Oh my gosh! Okay, let me compose myself. All right, so here we got. What we got here is a 2-year look back of Royal Caribbean, which is the dark blue, Norwegian, which is the light blue, and the red and green is Carnival. As you can see, when it comes to the trends, the industry actually follows itself relatively well. All competitors, you can see like significant bumps from September and October of 2019. Just looking at these trends over the last 2 years, they stay relatively close. And then at some point in the middle of 2018, you can kind of see the Carnival kind of spread away from the pack, even though it was still trending the same way. Big reason why is because when it comes to Carnival Cruises, the reality is that they're designed and focused on like young adults, party cruise kind of thing. Whereas Royal Caribbean and Norwegian are designed more for adults while also families. And that's one of the big reasons why Royal Caribbean has done so well, is because they're family oriented, which means, you got big packs of people rather than just individuals. Now, it goes without saying that they're clearly at a significant loss because of the sell-off back in March, as well as some of the sell-off that started to happen in January and February when the coronavirus started to, run its course. So if you were to buy these stocks 2 years ago and you held them, you would be down with Royal Caribbean by about 50.56%. If you had Norwegian, you'd be down 67.5%. And then Carnival, you'd be down 73.17%. Which is obviously a massive hit to a portfolio. So for those of you that have held this for a long time and have taken this hit, I am sorry, truly. But since we can't really do anything with a look back, let's start to see what they've been doing recently and some potential trends moving forward. Looking at the last 2.5 months from when the cruise lines hit their true bottom after the sell-off, which was March 18th, as you can see, they have recovered significantly from that bottom. Carnival's up 85%, Norwegian's up 126%, and Royal Caribbean's up 143%. Now, obviously, they are nowhere near where they were before the pandemic started, But the reality is that they are trending upward. And a lot of that is contributed to the fact that we are seeing a lot of optimism with the economy reopening, and a lot of reservations are still in place, set to start either in June or July, depending on which company or which cruise line you're with. So there's obviously a lot of optimism in the cruise lines. However, the reality is that when they start to open, when they start to do their cruises again, they're not going to be able to make up that loss as quickly as we would like them to. And the reason for that is because not only do they have their fixed costs, which they've been having to pay despite the fact that they've had no revenue, they're going to keep having those fixed costs, plus some additional costs when it comes to ensuring that they keep up with sanitary standards moving forward because of the pandemic. And so the key here is that we want to make sure that these cruise stocks and cruise lines have enough of the means to be able to weather the storms of those costs for the future. And so what I want to do is take a little bit of time to go through the financials, but rather than focusing on looking at each individual stock over and over again, we're just basically going to do a side-by-side comparison on some key factors. Now, for those of you that know me and have seen some of the previous videos, you know that I prefer to not swear by the analyst opinions, because at the end of the day, we want to make our own informed opinion. But if you were to look at just the stock price when it comes to how much Carnival has lost compared to Royal Caribbean Norwegian, as well as the fact that it has not recovered nearly as much, you can see that from recommendations from analysts, Carnival Cruise Line, or the stock CCL, is what has a hold recommendation, while Royal Caribbean and Norwegian have a buy recommendation. And again, if you just looked at the stock, you would think that that makes sense. However, this is where things start to get particularly interesting. If you were to look at the profit margins and the rest of the financial statements when it comes to Carnival, they're actually doing better than Royal Caribbean Norwegian. If you look at the most recent quarter profit margins, you can see that Royal Caribbean was negative 71%, Norwegian was negative 151, but Carnival, while still negative, was only negative 16. Most recent gross margin for the last quarter, Carnival was the highest, and operating margin in the last quarter, Carnival was actually the only one that was positive ever so slightly. This is one of the big reasons that, especially if you look at the last trailing 12 months or even the 5 years, return on investment, return on equity, return on assets, Carnival was actually the one that outbeats Royal Caribbean and Norwegian. To further that point home, if we look at their debt ratios, Royal Caribbean and Norwegian's long-term debt to equity in the most recent quarter is actually above 100%. So let's take a look at Royal Caribbean's 126% long-term debt over equity ratio. Imagine you owned a $100,000 home and you had a mortgage for $80,000, and your equity remaining in that $100,000 is only $20,000. That's basically what this means. They have more debt than they have in equity in the assets in total that they have today. Carnival, however, only has 45.49%, which basically means that in all of their assets, they have more equity than they do debt. You can certainly see that when you look at their debt to asset ratios, and specifically debt to capital ratios, or basically liquid cash. You can see that Carnival is actually the one that has the lowest ratios, which is what we want to see. What this tells me is that even though Carnival is the one that has not performed as well stock-wise, the company itself has a better likelihood of actually weathering the storms from the pandemic, especially if we have another second wave of COVID-19 here in the United States. That does not mean that Royal Caribbean and Norwegian will not perform well. Like I said, they're more oriented towards families and adults, whereas Carnival tries to be more of a party budget young adult kind of group. And so the key here is that Royal Caribbean and Norwegian tend to, appeal to people who are willing to spend a little more. So if Royal Caribbean and Norwegian do just as well in their traffic to Carnival, they're going to be able to do well from a revenue perspective. And looking beyond the numbers, guys, at the end of the day, a lot of it is driven by what's going to happen with the pandemic moving forward. Right now, we're seeing a lot of optimism in the economy and in the market. People are going back to work. A lot of counties and states have been able to start phase 2 of reopening, specifically, where I live here in Tennessee, which is good to know. But on the other side of that coin, there is the likelihood of a significant resurgence of cases of COVID-19 if people just start going back out into the world. And because of what we know from what happened in the cruise line industry when the pandemic started, where people were stuck on their ships, people are going to be incredibly skeptical, especially those that are not hardcore cruise line goers. And like I said before, the cruise line industry has a lot of headwind when it comes to some of the additional costs that they're going to have to spend in order to get people to be more comfortable with being back on the cruise line. The other big thing is that here in the United States, we're about to start hurricane season in the next few months, so that could cause some additional cancellations to some of the cruises. So guys, all that to say, we have a lot of known and unknown factors that could change the course of where the cruise line industry is going to be, as well as the cruise stock that we've looked at. But should we wait for some of those variables to unfold, or should we just go ahead and buy it now? That way we're not lagging. While the cruise line industry stocks have been able to do very well despite the fact that they're still not generating income, the key there is that people are optimistic about where they can be given where the reopening of the economy is going. And the other key factor there is that while they have recovered quite a bit from the bottom, they are nowhere near the top. And this may be a biased personal opinion, but I don't think the cruise line industry is going to go away anytime soon. There are a lot of people that are really excited about getting back into the swing of having vacations. So at the end of the day, for me, I do believe that this is an opportunity to buy. If you currently have it, you definitely don't want to sell it, so definitely a strong hold right now. But the other key thing is that I would either buy or at least increase your position to be somewhere between 5 to 10%. Now, the key there is that I'm not saying that you should just have 5 to 10% of your portfolio in just one stock. I do believe that you should have 2, if not 3 of these stocks in your portfolio. That way you're kind of overseeing the total cruise line industry for some of the more popular cruises out there in the publicly traded domain. And the other thing is that if you want to buy, don't buy just for a short-term pop, because again, we don't know when that is going to be. I would say that you would want to buy this to be a part of your portfolio for several years, because then that gives you some inline idea of how much this is going to be able to grow within the next few years. On top of that, having several of them rather than just one of the stocks in there allows you to have some additional diversification within the cruise line in the event that one of these somehow for some reason goes bust. It's hard for me to think that any of these 3 are ever going to go bankrupt, but hey, very possible. And you want to be able to diversify if you have all 3 of them. So guys, that's my thoughts and opinions on the cruise line industry stocks, Royal Caribbean, Carnival, and Norwegian. If you have any comments or questions or thoughts that you want to put out there for me, leave them in the comments down below. And if you have specific stocks that you want me to review for a stock pick of the week, let me know in those comments as well. And as always, guys, if you like the content I'm putting out on this video, be sure to subscribe if you haven't subscribed yet, and hit the like button on this video. And for those of you that are subscribed and hit the like button already, you are my people. Hope you guys are staying safe and healthy. Badger out.